Welcome to Albuquerque Real Estate Talk with Tracy and Tego Venturi of the Venturi Group of Real Broker, episode 470, Tracy.
Yay. That's a great number.
It is.
We are 470 episodes.
We're with Real Broker here in Albuquerque. And if you want to get help with your real estate needs, reach out to us at
448-8888.
Want to introduce our guest?
Sure. So we're joined by Joanna Rushing with Primary Residential Mortgage here locally, top realtor in the area.
You just said top realtor in the area.
Oh,
I'm not a top realtor in the area.
Top lender in the area. And Joanna is one of those lenders that we can send just about anybody to, and she can figure out a way to get them taken care of. She has this really great way with especially newer first-time buyers, people that haven't been in the process for a long time, because she's really good at explaining the lending process and the options and different loans that are available. So we're excited to have you here. I know there's a lot of lending in the news these days.
Well, and let's segue right to that real quick. So just to run down, we've got a couple stories about local real estate, some things going on, some market trends. Obviously, I'm always going to talk about market trends. But the big news this week, the really, really big news this week, was what happened with interest rates. And that's where we have Joanna on this week to talk about that. We saw what did we see? About a 40 basis points, or about 0.45 drop just this week.
Even more. It was about 0.5%.
Oh, wow. Okay. So Joanna, go ahead and introduce yourself, your MLS number, and your how do people go hold of you?
Yeah, absolutely. Well, thank you so much for having me. I always enjoy getting to talk with you guys about the market. And my name is Joanna Rushing. I am a mortgage loan officer here in Albuquerque with Primary Residential Mortgage. And my NMLS is 1427054. And best way to reach me is my cell phone, 505-917-6102. Or you can reach me by email at jrushing@primeres.com.
Perfect. Okay. What happened with mortgage rates this week?
We finally are starting to see the juggernaut turn. That's what happened. We got some really good news for mortgage rates that finally started to suggest that maybe we're turning the corner with inflation and with the job market, and that the Fed may finally be done raising interest rates, and they may hold steady or even start to cut interest rates coming into 2024. And the market took that news really, really, really well as far as mortgages are concerned. And so we finally started to see interest rates come down in a meaningful fashion. In the last about 2 months or so, we've gone from rates in the low 8% to the mid 6s, which is just, a drop that we haven't seen in that short amount of time in many, many years.
That's pretty extraordinary. I mean, it is a big move, just like we had that huge move up last, I don't know, was it maybe May, June of 22? Now we're going the other direction because of, well, the thing that I always joke about is when there's bad news on the economy, meaning the economy's slowing, inflation is slowing, jobs are not as strong, that's good news for mortgage rates.
Exactly.
It's this weird thing, but that's the way it works.
Yeah, and when you think about it, it kind of makes sense, right? Because housing is such a big part of the economy. And so whenever the economy is struggling, one of the ways to get the economy to kind of come back is to make sure that the housing market can continue to remain robust. And one of the ways that the housing market remains robust is we offer people, more affordable interest rates. So as rates go down, it helps bring up the housing market, which theoretically should help continue to boost the economy.
Yeah, and I just brought up the chart. If anybody's watching this on YouTube or on Facebook on the video recording, you can see the chart. We have a 1-year chart. And yeah, we had, we were kind of in that mid 6s for a lot of earlier, end of last year, earlier this year. And then it just kept going up and up and up, all the way up over 8%. When was that? That was in
October.
Yeah, October.
October.
Okay. Yeah, there we go. October. And so, yeah, you can see, if you're looking at the chart, you can see the dramatic move down that we've had. Mm-hmm. So Joanna, I know one of the challenges in our real estate market right now is affordability, and affordability meaning the wages have not gone up as much as inflation, have not gone up as much as home price, and definitely have not gone up as much as interest rates. So this is a little bit of relief.
It's more than a little bit of relief. It's a huge relief. I mean, that amount of a drop is making it so that people who are already pre-qualified, maybe up to $300,000, maybe now they can go to 325 or even 350 just by virtue of that interest rate going down like that. So it's a huge boost in affordability, especially for people who are in kind of that first-time homebuyer range where they're trying to buy homes in the $200,000 to $300,000. It can be the difference between them getting a house and not getting a house. And all of a sudden, you're not fighting with every single other person for that $200,000 house. Now maybe you can up your limit to 250 or something like that, and it actually becomes much more likely you'll get a home.
Tracy, let me just ask you, bringing into this conversation, is the pre-qualifying versus pre-approval when we're out with clients and somebody's looking to buy a home. How important is that for you when you're helping somebody shop?
Sure. So obviously, if we're going to put an offer in on a house, having a really strong lender letter to go with that offer is exceptionally important. And as Joanna knows, the language in that letter that says where they're at in their financing strategy makes a big difference too, because some of them, the letter might say they've applied, but we haven't verified anything yet. We want a letter, right, Joanna, that says something more than that.
Oh yeah, absolutely. I mean, and it's a struggle for us in the industry is that everybody defines those terms a little bit differently. So a pre-qualification letter from me may mean one thing, and a pre-qualification letter from onlinelender.com may mean something totally different. And, one of the things that we take a lot of pride in here at Primary Residential Mortgage is that I don't issue a pre-qual letter unless I've already done my due diligence. And I'm not going to write you a letter unless I 100% expect that loan to close, because I've already looked at your credit. I've already looked at your assets. I've already looked at your income, and I've already reviewed your pay stubs and your bank statements and your credit report. So we've already identified the potential pitfalls, which means that if I write you a letter, it's because I expect you to get a house.
Yeah. And obviously you do some counseling and coaching on how not to change your ability to get that house.
Right. Exactly. Yes, please.
Advice from both of you. So if somebody's been out there and they've kind of been on the sidelines waiting for like the right house to come on the market, first off, Joanna, what should they be reaching out to their lender and getting updated on that?
Yeah, I think it's really important to stay in touch with your lender. I think a lot of people don't see lenders as people, but they see us just as a piece of paper, which, that's one thing that I work really hard against, is I make sure that my clients understand that I'm a person on the other side of the phone too, who cares about whether or not you get into a house. So I tell my clients all the time, please call me, text me, email me. If we talk every single day until you get a house for the next 6 months, I'm fine with that, because I want to keep you updated. I want you to know, hey, rates went down a little bit. That means that your pre-qualification is a little bit stronger now, because we can go a little bit higher, and vice versa. I mean, when rates were climbing at a clip, we were calling people and saying, hey, you were pre-qualified up to this, rates went up a half a point, you're not anymore. And I'm sorry, but I don't want you to find that out when you try and put an offer in on a house. I want to keep you updated and abreast of the situation, because the market is constantly changing. But yes, it's very important to stay in touch with your lender and to let us know if you got married, got divorced, if you bought a car, if you finance that furniture you've been wanting for a while on the new Home Depot credit card you got. We want to know all of those things, because we can only help you as much as we get good information.
So perfect. What I was going to say about that is, don't go and do that if you're in the process. Don't go buy that new car and finance it. Don't go and change things once you have your lending figured out, right? Don't go and add to your credit without talking to the lender. So it's pretty important.
So,
or switch jobs if it's a different.
Please don't switch jobs.
Yeah.
Please.
Yeah. One of the conversations I'm seeing kind of in what I call the housing Twitter, housing Twitter is what I call it. It's like all the housing economists, people and stuff that having these conversations is, all right, with this big drop, or is there suddenly going to be all these buyers that want to come back into the market? What's your take on that? What are you seeing? More of like feet on the street kind of thing.
Yeah. So has our phone been ringing a little bit more this week? Yes. Should it be ringing a little bit more this week? Yes, because one of the stories we wanted to get to today, perfect segue, don't have to get to it, is Now is probably the best time to buy a house. If you're in the market between now and late next spring, now is the time because there aren't as many people competing for those houses. Come spring, we'll have more people looking at houses and you'll be competing more. And traditionally, right now, I know you have a chart for this, Tego. Right now is when prices are the lowest of the year historically, right?
Do I
Let's see.
do I have a chart for this? Hold on. Oh, wait, I got to find the right chart first.
Yeah. So
Yeah.
So what we know is come late spring and into early summer, that's traditionally when home prices peak. So if you wait, you might get a house that costs a little bit more and have more competition to get that house. So
I'm going to show it on the screen here again. If you're on watching or listening to us on video, I'm going to pull up this chart. It's pretty complicated when you look at it. But what I did is I took the Zillow Home Value Index. This is not home sales prices. This is actually home values because, of course, Zillow tracks the value of every single home in the entire country, right? And so they're able to give a basic idea of how much home values move from month to month to month to month, and they've got data all the way back to 1999, and it gives us an idea how much home prices move every single month. And the thing that jumps out in this data is home prices are generally lowest in December and January every single year, just like clockwork, really. And home prices are always highest in
May and
June. Yeah, every single year.
April, May, June,
So
according
what
to
does
the
that
chart.
I mean, to me, that means if you're all about the data and following the data and following, when is the best time to buy, it's right now.
Right.
Now, the challenge we have, Tracy, and you know this, and Joanna, you know this too, is we have a shortage of homes on the market. We just don't have a lot of homes on the market. So, being ready to go is a big deal, and being able to jump on it when it comes on.
Yep.
But I think, like you said, a lot of people put their house shopping on hold through the holidays.
And even into the new year. It's sort of like through January when the kids get back in school, a lot of people have put it on hold. They've got the kids home, they're busy with holidays, with family, with different things that they're not normally doing. And then after the kids go back to school in early January, we do see things tick up again. But not necessarily home sales. A lot of people think they need to wait till late spring.
No, for sure. And I would guess this year we're going to have more homes coming on the market in the spring than
in the last year
the last year for sure, because a lot of people that have those. I don't remember, Joanne. I think the stat is like 80% of people that have a mortgage are at 4% or lower right now.
It's pretty significant.
Yeah. So there's not people aren't super motivated to jump off that 4% and get on an 8%. Well, maybe they could stretch a 6.875, right? Maybe they could make that work.
Well, and so much of it too is looking at the trajectory, right? It's a lot easier to stomach a 6.5% rate when you're coming down from 8 than it was for the people who were coming up from 4. And so I think the perspective of the 6.5% rate right now is completely different than when we were at 6.5, a year, 18 months ago. It looks a lot better from this side. And I agree with you. I think the people who are at 4% interest rates, if they're trading 4 for 6.5, maybe you can move. If you're trading 4 for 8, no, you're probably going to stay put.
So interesting thing about that. We were discussing this the other day and said, hey, some people should already be thinking about refinancing. And I went, no. And Joanna, we're down perhaps 1.5 points in some cases from where some people might have closed 2 months ago.
Mm-hmm. I'm definitely of the opinion that if this trend keeps up, then I think that spring, summer for us is going to be very heavy with refinances. And I think with what you guys are saying too, also purchases. I mean, I think the mortgage market has a potential to boom pretty heavily come April, May, June, honestly.
Yeah. So on our screen now, if you're watching us online.
Well, actually, no, I don't have it on the screen, but I do want to talk about this because it's an interesting an interesting stat, and it relates to mortgages, and it's how much money do you need to put down a down payment? And so there was a survey, and they asked, it said, do I have to put 20% down? And what they found is that um, there's a lot of people that think they have to put 20% down to purchase a home. And Joanna, of course, we know that's not true. And there's been more programs rolled out this year. Let me ask a different question, Joanna, or kind of along the same line is, do you think mortgage lending standards have loosened up over the last, let's say, 6 months because the market has been slow?
No, I don't think that I could say that mortgage lending standards have loosened. No. But the mortgage market is trying to make sure that it tweaks what it can in order to continue to address the issue of affordability. So there's programs that are coming out where it's easier to buy multifamily homes if you're going to live in one of the units. There's program changes that are coming out saying, well, you can get down payment assistance maybe if you're not a first-time home buyer, or there are certain programs where you can get down payment assistance without an income cap. I mean, we have a program right now where you can get down payment assistance equal to your full down payment, and there's no income cap and no requirement to be a first-time home buyer. That's unheard of. That's 100% financing for the average Joe on an FHA loan. And all of a sudden, it's okay that you don't have that nest egg sitting in your bank account, but maybe you make fine money and your credit's fine and you have a steady job. And the only thing that's holding you back is you haven't been able to save that money. Well, now we can help you. And so there's a lot of stuff that I wouldn't say that guidelines are loosening, but guidelines are being tweaked and programs are coming out and the agencies are saying, yes, affordability is a problem. We do need to address that in the way that we can that still avoids a big mortgage meltdown like we had in 07 and 08.
So
you need to make sure that doesn't happen again.
Yeah, so it's very different than like what happened,
Right.
let's say in 04, 05, 06, right, which was drastic loosening of lending standards and kind of these what we call liar loans, where people really didn't have to do much in the way of qualifying.
Right.
So yes, there's programs to help people get into homes right now, but you still have to qualify. You still have to prove that you can actually make the payment, which was maybe not so much the case back in the day, let's just say, but which created obviously what happened in 08 and 09.
Exactly. Yeah. And we're not on that path even remotely right now, which honestly is great for me and for the economy and for everybody involved, because we are participating in much more responsible lending. And honestly, that's exactly what we need to be doing to continue on this path rather than ending up in another giant hole.
Yes. That just reminded me, I gotta bring, there's, for some reason, there's people out there thinking that there's this flood of distressed sellers coming into the market, meaning
no,
people
there's
that
not.
are upside down on their mortgage or are, in foreclosure or pre-foreclosure. So one of our colleagues, somebody Joanna, in the real estate business, she was in a class where this instructor from another state was in town teaching realtors some stuff and doing stuff. And he started talking about all the foreclosures that are in the pipeline. And this friend of ours in the real estate business, she knew I, would know the real numbers. And so she started texting me and she said, okay, what's the story? Are there really foreclosures, a bunch of foreclosures in the pipeline? And so I pulled up some stats. So nationally right now, there's 3.5% of all the homes that have a mortgage that are in some delinquent. Okay. So, but that just means they haven't they're either 30 days late or longer. There's only 0.5% of, and not even that, 0.4% of all the mortgages that are in foreclosure nationwide.
Mm-hmm.
And
which still doesn't mean they're going to go through and be losing their house.
Exactly.
Right.
So
exactly.
Anyway, point.
Yeah,
four.
and in New Mexico, just to give you an idea, delinquents 2.9, which is actually lower than nationally.
So better than the national stats.
Better than the national foreclosures, it's 0.6, which is actually higher than the national stats. Now, you got to understand New Mexico's foreclosure process is a lot
Very
more
long.
difficult than other states too, meaning difficult for the lender. It's actually good for the homeowner because basically it's a much longer process from the point that foreclosure filing happened. So
So
that
finish
was a
the
really
story.
long-winded way to say. So anyway, I
So
sent her,
did they
so I sent her
correct
the
the
stats,
instructor?
and she corrected the instructor, and doesn't matter. I mean, that obviously didn't quite understand it.
It's
The
just
point is, back to what Joanna said, is homeowners have the best balance sheets they've had in history, and a third of people that own a home own it free and clear too.
Mhm.
So
And the people that own these homes right now were put through the paces to get their mortgages. So
exactly.
there's multiple layers of protection right now because you have qualified people who are in homes with a lot of equity with decent interest rates. I mean, in order for us to get to a flood of foreclosures, every single one of those levees would have to break. And
Yeah.
even if we have a little bit of a market correction where home prices maybe come down or we see a little bit of depreciation instead of appreciation, it would have to be so significant. Because if you go back to that chart, if you look at the appreciation that we have gotten in the last 2-3 years, it's significant. And so even if we have a little bit of a pullback, if your home's appreciated 15% and we see a 5% drop, which we're not going to, but even if that happens, the net gain's still 10% for a lot of people. We're nowhere near a mortgage meltdown or a foreclosure flood or anything like that.
Yeah, I will say there is a lot of people on social media, on a lot of different places, YouTube, that are almost cheering for, or like pushing basically a market crash in
Right.
housing. And
Mm-hmm.
I think part of that has to do with the frustration of the affordability. We have an affordability crisis in the United
Mm-hmm.
States. There's no doubt about it. But that's different than a market crash,
Right.
right?
very different.
Very different.
On
Okay.
the
Speaking of,
consequences of a market
Yeah.
crash, too, sorry, Tracy, I didn't mean to interrupt, but the consequences of a market crash and a giant recession are going to be really far reaching. And it's not going to be that if we go into that obviously all of a sudden everybody gets a house. We're going to have so much more widespread issues if that happens that I'm certainly not excited about the prospect of that. I also don't see any indicators going that way, but
Yeah, no, I agree with you. And so
well,
kind of
housing's a
back to the
huge
housing
portion.
challenge that we have in just, let's talk about Albuquerque. Tracy, there was a story about the old motel, but the
It's a
motel that's
hotel.
hotel,
The hotel, not
the
motel.
hotel.
The hotel being transformed into affordable housing. The Los Altos Lofts, right at the Los Altos, right on the north side of I-40 there at,
Like Lomas and Montebo.
yeah,
Yeah, by
yeah,
Target.
by Target and
Hotel
Best
Circle.
Buy, Hotel Circle.
Yeah,
Yeah, so the city is transforming that hotel to the tune of about, what, 11 million?
yeah. I saw 11 million, I think, is what
$11 million
what their
to
expense.
purchase the hotel property and do the renovations. So it's
Wow.
going to be 90 studio and single bedroom apartment units with improved living space. And so they're going to take the 104 hotel units to reconfigure them to be 90 studio and single bedroom apartments. And each unit is going to feature a small kitchenette, and residents will have access to the hotel's former amenities, including the pool and fitness room. But what's really great and really necessary for the people that they're expecting to stay there, it's going to be affordable housing, and they are gearing it to people with vouchers and individuals transferring from homelessness or transitioning from homelessness. But they're going to have an on-site coordinator to offer financial literacy and other assistance to residents. And I know from personal firsthand experience, people that experience homelessness often don't have that ID card. They don't have the ability to function, to get food stamps or get the services that they need. So for the people there to have somebody on site to help them function and get back on their feet or get the necessary things to be able to get a job. When you don't have an ID or a driver's license, you can't find your social security card, you don't have access to a computer to go get a new one, having somebody on site there is just phenomenal. When I read that part, I was so thankful.
Well, and I know there's some people that are kind of poo-pooing this. It's like, oh, it's just a drop in the bucket, and oh, it's so much money and all this. Well, you know what? There's no silver bullet for any of this.
Got to do something.
We got to do something, right? Every little bit is going to help.
But you know what's interesting? That 11 million for 90 studios and one bedrooms, that's about 120,000 per unit. So it's, 11 million sounds like a lot to take on that project. Yeah. But it's necessary. We need something, and, to do anything we can that makes sense. And, what's interesting, Joanna, is Tego and I own a rental property very near this location, very near. And I said the first time I looked at it on the map, I went, what a great location. It's around a lot of retail. There's services there for people that, maybe use public transportation. And yeah, I own a house right around the corner from it, but I'm thankful that they're going to turn that property that right now has been boarded up for a long time, that hotel there.
Well, back to the whole housing we're talking about the housing crisis in Albuquerque, in the sense that we just don't have enough houses, especially affordable houses for folks. And so this is one solution. There's the whole ADU thing going on, the
accessory
dwelling unit, where you can build basically a little building on your house and either have family members live in it or rent it out. That's, again, it's going to be a drop in the bucket, but all these little drops in the buckets are going to help. One of the things that the city and counties or cities and counties need to work on is the permitting and the process to get construction done. I know builders I talk to, that's still a big challenge, and hopefully they can get that, because the process to get things done is still very slow.
Speaking of a drop in the bucket, we had some really nice moisture this week, and I'm hoping all you that listen to our show regularly took advantage of the reminder to call your roofer while it was nice and dry and warm earlier this fall. We were like saying, don't wait. And I think the roofers are really busy right now. We've had several calls to our office asking for good names of roofers. So we've given out several. We usually give out at least 3 names when someone calls us. So hopefully they were able to reach somebody.
Well, I think that's a good reminder that people, if your roof leaks a little bit, it's not that uncommon, right? Especially in New Mexico, where we have these long dry spells with really, a lot of sun, and it eats up the roof, and then all of a sudden you get this rain and everything changes, and you get a little bit of leak. So
I think it's mostly where the roof penetrations are, and how we reseal them and it dries up all summer.
We're supposed to.
Need to reseal
those. We're supposed to reseal them.
Ours just got resealed last month, Tego, so we're good.
Yeah.
So always great to be here. It's like time flies. We're chatting real estate and lending with Joanna Rushing from Primary Residential Mortgage. We really appreciate you being on with us this morning.
Thank you,
Joanna. Just again, if somebody wants to reach out to you, talk about mortgages, what options they have, how do they get a hold of you?
Yeah, absolutely. So again, Joanna Rushing, I'm with Primary Residential Mortgage, and my cell phone is 505-917-6102. You can call or text me on that phone. And then my email address is jrushing, like rushing out the door, at primeres.com.
Awesome.
Well, it's great to have you. And again, we're the Venturi Group. This was episode 470 in the books, Tracy, of Albuquerque Real Estate Talk with Tego and Tracy. And if you want to reach out to us, we're at 505-448-8888. Have a great, we'll talk before Christmas, but yeah. Take care, everybody.
Bye-bye.
Thanks. Bye-bye.